Welcome to your daily market briefing. Today we're unlocking the market's moves from October 13th, 2025, with a comprehensive review of detailed candlestick signals. This expertly crafted report provides a full overview for traders and investors, highlighting market direction, standout sector and industry candlestick formations, pattern frequency by capitalization, valuations, and actionable sentiment insights. All candlestick duration measurements are specified within each section for immediate clarity, helping you navigate today's complex price action. Let's begin with our market snapshot. Markets opened under heightened volatility following renewed tariff tensions between the US and China. The S&P 500 experienced its most significant single-day drop since early April, closing down 2.7%, which represents a market capitalization decline of over $1 trillion. Short-term sentiment remains cautious, as major indices and growth sectors lost significant ground throughout the trading day. High-volume sell signals were detected during the last market hour between 3 p.m. and 4 p.m. Eastern Standard Time, particularly visible on 30-minute and 1-hour candlesticks, indicating a strong bearish finish to the session. Analyzing the candlestick structure, we observed a clear trend across major indices, across both the S&P 500 and NASDAQ 100. Bearish engulfing and evening doji star patterns appeared frequently on 30-minute and daily charts. These formations confirm a decisive shift in sentiment toward defensive positioning. A bearish engulfing pattern occurs when a large red or bearish candle's body completely covers or engulfs the body of the preceding green or bullish candle, signaling a powerful reversal where sellers have overwhelmed buyers. Conversely, select healthcare and infrastructure stocks displayed bullish engulfing formations when measured at the 60-minute candlestick duration, suggesting isolated pockets of strong bid support amidst the broader market downturn. Our technical interpretation focuses on the most active capitalizations today. Large-cap sectors were overwhelmingly dominated by bearish reversal structures, most notably the bearish engulfing and the doji star bearish patterns on the daily chart. These signals indicate a high likelihood of follow-through downside in high-weighted technology and financial equities. The doji star bearish pattern, often called an evening star, is a three-candle pattern that begins with a large green candle, followed by a small-bodied candle or doji that gaps up, and concludes with a large red candle that closes well into the first candle's body, signaling a peak and impending reversal. In contrast, small and mid-cap industrials showed notable bullish hammer and white Maribozu signals when measured at the 15-minute and daily intervals, hinting at potential short-term recoveries within these oversold segments. Diving into our sector and industry highlights, the technology sector, a large-cap dominant group, faced significant headwinds. The daily chart showcased dominant bearish engulfing and doji star bearish patterns, with the 30-minute chart reinforcing immediate and sustained selling pressure. The sector remains overvalued against forward earnings estimates, suggesting the current downside may not be fully exhausted, and more declines could be on the horizon. The sector shed 4.2%, erasing approximately $650 billion in market capitalization. Next, we turn to the healthcare sector, which includes a mix of mid to large capitalization companies. On the 60-minute chart, bullish engulfing and hammer patterns appeared, signaling notable resilience against the market's negative tide. A hammer pattern is formed when a security trades significantly lower than its opening, but rallies to close near its open, creating a candle with a long lower shadow and a short body, resembling a hammer. This pattern suggests that buyers stepped in at the lows to push prices back up. This sector was generally assessed as fairly valued, with isolated pockets of undervaluation found in select biotech names. Healthcare managed to close nearly flat, with a minor loss of 0.2%. Equivalent to a market capitalization change of just $15 billion. Moving on to the infrastructure sector, specifically focusing on mid-cap names, we observed a compelling technical setup. Multiple bullish white Maribozu candlesticks emerged on the daily chart, pointing to renewed and aggressive institutional interest. A white Maribozu is a candlestick with no upper or lower shadows, meaning it opened at its low and closed at its high for the day. This powerful pattern indicates that buyers were in complete control from the open to the close. This sector, especially mid-cap utilities and engineering firms, is registering as undervalued, with upside momentum likely to persist if the broader market's risk-off sentiment continues. Infrastructure posted a strong gain of 2.1%, adding about $45 billion to its market capitalization. Finally, the small and mid-cap industrials sector showed signs of life. Bullish hammer signals were identified on the 15-minute and daily charts, indicating that despite intraday selling pressure, buyers emerged to defend key support levels. This suggests the potential for short-term recoveries within segments that have become deeply oversold during the recent market pullback. The sector saw a modest increase of 0.8%, a market cap change of approximately $18 billion. Examining the major formations by capitalization, a clear story emerges. For large-cap stocks, the technology sector was defined by 8 instances of bearish engulfing and doji patterns on the daily chart, confirming its overvalued status. In the mid to large-cap space, healthcare showed 6 bullish engulfing patterns on the 60-minute chart, reflecting its fair valuation and pockets of undervaluation. Mid-cap infrastructure stood out with 7 white Maribozu patterns on the daily chart, highlighting its undervalued appeal. Lastly, small to mid-cap industrials displayed 5 bullish hammer patterns, primarily on the 15-minute chart, signaling potential bounces from a mixed valuation standpoint. In terms of sentiment and outlook, the market-wide mood is defensively tilted, a shift felt most acutely in growth-heavy sectors. The technology sector continues to exhibit classic bearish structures, with above-average volume accompanying the negative candlesticks, confirming near-term downside risk. This pattern strongly suggests a potential rotation out of overvalued tech and into undervalued defensive names. In this environment, infrastructure stands out as the most undervalued sector today among mid-capitalization stocks, a status bolstered by its powerful bullish signals and evidence of institutional inflows. To summarize today's action, our candlestick analysis underscores key rotation themes playing out in the market. Investors are actively moving out of overvalued large-cap technology stocks and reallocating capital into defensively valued infrastructure and select healthcare names. The repeated and high-volume bearish signals in the technology space highlight significant downside momentum. At the same time, the clusters of bullish patterns forming in mid-cap infrastructure signal a clear opportunity for those seeking value. All of our findings specify the precise candlestick durations, enabling informed, real-time market navigation with clarity for both trend following and reversal setups. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe, and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.